So we've been talking about the futures being lower. We did see the Dow move fractionally higher just a short time ago. What's your word of the day? How do you see today shaping up?
Yeah, my word of the day is mutable. And I think that's because we look at where the markets are. We have come in to this year, as you just mentioned, the S&P hitting an intraday high yesterday, NASDAQ 1% from its high. And we have really high expectations. Optimism is high. Valuations are quite high on the stock market. And so I think the market is going to be prone to change. I think it's going to be inconsistent as we see how new policies from the administration play out over time versus the expectations of what we thought the policies were going to be at the election. So I think the markets will be mutable and a lot of volatility, at least for the first half of the year.
So you're seeing a lot of volatility. Obviously, coming up, we do have a Fed meeting and a Fed decision. What are your expectations for that? And more importantly, what do you see the market reaction being to that?
Yeah, I think it's going to be interesting. Obviously, the market is pricing in only 1.5 cuts so far this year, a pause for January. I don't think the Fed is going to come out and surprise the market by doing anything different. So I think we'll get a pause. It's going to depend on what the press conference sounds like. If Powell is hawkish, I think that, the market kind of expects a little bit of that. But if he comes out really dovish saying we're going to continue to get more cuts, I think you could see the bond vigilantes come in like you did before and push yields back up towards that 475 level that we saw previously because they just don't believe we need to have more stimulus in this economy. So I think it's all going to come down to what Powell says in the press conference. No surprises by pausing.
All right, speaking of the broader economy, after the president's remarks, we've seen industrials move higher, a lot of talk about manufacturing here in the U.S. So just based on your thesis here, where bond vigilantes, they move yields up higher, how does that impact industrials? And I know there's another area you like, financials. How do you see those two areas being impacted?
Yeah, both of those areas have been really strong leadership all year. And you look at financials, the shape of the yield curve, deregulation coming in, loan growth growing. I think that's going to continue to be positive for financials. We still like that sector. And industrials should benefit some from that as well. The idea of reshoring. It's a huge thing with the America First component of the new administration coming in. So I think we'll see a lot of CapEx coming from companies. Obviously, guidance and earnings this quarter will give us a clue to that, but both of those areas continue to do well, and a large percentage of those sectors hitting 20-day highs. That's a good positive outlook.
So you're mentioning earnings. We're getting off to a pretty strong start to the earnings season, but we have mega cap tech coming up in just a few days. What are your expectations for earnings season? Coming into earnings season, we saw a rally in the dollar. It has cooled off quite a bit. That was thought to possibly have a big impact on this earnings season.
There's a lot of optimism for earnings season. I mean, expectations for EPS growth, I think, are 12% for the fourth quarter year over year. And for 2025, it's double digits for every single quarter. I think if earnings don't live up to expectations, we could see a pretty significant pullback in this market as people re-rate companies and what they see going forward. But as you said, the big tech names are coming. Mag 7 itself, expectations are around 22% earnings growth. So there's a lot to live up to. We'll see if it happens or not.
All right, a lot to live up to. We're less than a month away from Nvidia earnings on February the 20th. We also saw another chip name report, SK Hynix, seeing some weakness across the chip sector. We're going to show the audience right now. Earlier, we were showing Nvidia down more than 1.5%. Are you starting to get concerned about some different parts of this AI trade? Specifically, Nvidia, very lofty expectations. ARM's kind of pulling back. It had a big rally after the news about Stargate, pulling back after that. But are you getting concerned that this is a cyclical sector? We keep depending on these chip stocks, specifically Nvidia, to move the market higher, but it is cyclical.
It is, and you look at this AI trade, and there's so much momentum going forward. And then obviously the announcement we had about Stargate, it continued and made the NASDAQ rally on that. But we're firm believers, and when we speak with our clients, we tell them, look, we have exposure to these names in our portfolios, but they've had such large runs. There's nothing wrong with trimming a little bit of your holdings, take some of your gains off the table, and maybe find some other areas of the market that are bottoming or that look like they might benefit from some of the new policies going forward, and putting some money to work there. So not concerned that these sectors are going to do very poorly, but I think you can go ahead and mitigate some of your risk there and put money to work elsewhere.
All right, so you are looking at some other parts of the market. I want to get to your pick. What's your pick for today and why?
Yeah, my pick is Comcast, not just because we're here on CNBC this morning, Frank, but when we talk about a mutable market, a market that we think is going to be inconsistent, you want some defensive stability in your portfolio. And one of the ways you get that is a solid cash flow. Comcast is a great company for this. That core business, that broadband business, gives them really strong cash flows and stability. You get a 3.4% dividend, so it's a great name in our dividend strategy that we like. And with the stock down about 10, 11% over the last quarter and earnings coming out next week, you can start to dip your toe in the water a little bit. It's trading at 9 times earnings. And with the spinoff coming and the Comcast being able to focus more on that broadband business again, I think it's a great long-term holding in your portfolio.